Eddie Ghabour is with us right now. Okay, man of the hour. All right, Eddie, are you selling into the rally that we've seen recently? Not the rally today, but the one we've seen recently. You've been selling?
Absolutely, Stuart. You know where my stance has been in regards to getting ready for this second quarter. And I think this rally's fantastic because it gives investors a second chance. And you don't always get a second chance in the capital markets. So what I would tell investors is if 2 weeks ago you were kicking yourself because you didn't lower risk and you want to lower the risk in your portfolio, you may not get a better opportunity than what we've seen because we've had an impressive bear market rally. And I think it's going to get a lot more choppy to the downside over the coming months.
Right. I mean, long time you've been saying that the second quarter of this year, calendar year, which begins in April, I believe, you've been saying it's going to be a doozy. It's going to be a real rotten month for investors. It's going to be a sell-off. Is that still your prediction?
It is, and the reason why is when you look at the fundamentals of what we're going to be faced with, it's some of the worst that I've seen in my 24-year career. And I hate to sound so negative, but that's realistic. Look at GDP projections. We could see GDP drop anywhere between 50 to 70% in a 6-month period of time. I don't know if we've ever dropped that much in that short a period of time.
Wait, whoa. Hold on a second. The GDP of the United States of America is roughly $20 trillion. Roughly. You're not telling me that it's going to go down to 10 trillion, are you?
Look, we had a 7% fourth quarter print on GDP. I think by the time we get to the second quarter, end of second quarter, we're going to be under 3.
That's
and
the
possibly
growth rate.
2.
Okay, the growth rate will be cut in half. Okay, all right.
That is correct.
So these are the fundamentals you're talking about.
Drop in growth.
Okay. So how big a decline are we going to see when the second quarter begins on April 1st?
I believe when we look out for the next few months that we are not only going to test the lows that we saw a couple of weeks ago, that we will be below those lows. That's where our positioning is. And the bond market, there's a tug of war between the bond market and the stock market right now. And our money's betting on what the bond market signals are. And that's why we've been extremely active. And look, earnings over this next quarter, the guidance is probably going to be weak. And when you compare them to the second quarter of last year, the earnings growth is going to be decimated, in our opinion. So you've got earnings working against you. You have GDP decelerating. And the Fed, because they made one of the biggest policy errors in history by not raising rates last year, has to be more hawkish than ever at the absolute worst time. And by the way, we have a war going on as well, too, that's making oil prices go through the roof. That's going to crush consumers. So it's a very, very tough environment. In our opinion, this is not the time to try to be a hero and pick a bottom.
You're a brave guy, you know. I mean, you come on television on a daily and weekly basis, and you say exactly what you think, and you give very precise instructions. And so far, you've been right. You're getting a little nervous that one day you're going to be wrong?
Well, as you say, Stuart, you're only as good as your last call. And
True.
when I'm wrong, I will come on your show and tell you I was wrong. But more importantly, I will make changes to our client portfolios to pivot. I won't just stay wrong just so that way I can't admit being wrong. You're not always going to be right. I just have to have a really good batting average.
I take it your clients are happy at this moment?
Yes, indeed. That's why I've got this smile on right now.
Okay. Come back next week and you're still okay. Eddie Ghabour, always good. Thanks very much, Eddie. We'll see you again soon.
Thank you.
You got it.